You're listening to Uranium Spotlight on Tuesday, July 9th, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, the U.S. bolsters domestic supply, India expands their nuclear fleet, and Niger pulls the licenses on another uranium project. Last week, the uranium spot price closed the week at $85.50 U.S. per pound U3O8. In June, the uranium market saw a decrease in spot activity compared to May, aligning with lower monthly levels observed since the start of the year. There were 27 spot transactions, 23 for U3O8, 3 for UF6, and 1 spot conversion transaction, with no enrichment services deals. The total volume of uranium transactions was about 2.6 million pounds of U3O8 equivalent, with 1.8 million pounds for prompt delivery and 6 transactions for delivery within 7 to 12 months. In the term market, there were 4 utility contract awards in June involving UF6 and toll conversion services. Spot activity has been generally quiet over the past 2 weeks. At the end of June, a deal was confirmed on June 24th for $83.50 a pound, holding steady through June 25th. On June 26th, the price increased to $84 due to a single transaction and stayed stable until June 28th, when a deal at $85.50 matched the daily indicator. The market went quiet again on July 1st with active bids at $85, but no motivated buyers or sellers, keeping the bid-offer spread close to $85 to $86. This pattern continued throughout the week. Today, the market continues to experience a summer slowdown, with the U3O8 price stable at $85.50 a pound. The term uranium market was also quiet last week, with no new formal utility demand. Some midterm UF6 activity was tracked at the end of June. A non-U.S. utility is evaluating offers for up to 3.2 million pounds of U3O8 for delivery in 2025 to 2026 and 2027 to 2031. Another non-U.S. utility is finalizing selection for 4.5 to 6.75 million pounds of U3O8 equivalent for delivery from 2028 to 2036. Indicative price offers for 2 reloads of EUP with delivery in 2024 and 2025 are under review. More utilities are expected to enter the market in the coming months. This past week, the U.S. Department of Energy announced that they would start buying a large amount of domestically produced low-enriched uranium. This buying process will be supported by $2.7 billion from President Biden's Investing in America agenda. This is a crucial time for the U.S. uranium industry as the U.S. looks to end its reliance on Russian uranium. In May, President Biden signed into law the Prohibiting Russian Uranium Imports Act, which forbids U.S. utilities and resellers of uranium from purchasing Russian uranium without first securing a waiver. To acquire a waiver, buyers will need to present a reason such as being unable to find other affordable options or the purchase being in the national interest. Waivers will only be valid until 2028, at which point absolutely no more Russian uranium imports will be allowed. All of this while the United States still maintains the world's largest reactor fleet. In 2023, the United States received 12% of its uranium for Russia, and according to Newsweek, produced only 82,533 pounds of uranium, while U.S. reactors consumed 50 million pounds of the critical mineral. This is likely why the Department of Energy is presently looking to support the domestic U.S. uranium industry. They might find, however, that U.S. uranium resources are somewhat lacking. In terms of reserves, the U.S. has about 1% of the world's uranium reserves, with approximately 100 million pounds. However, U.S. allies such as Canada and Australia have billions of pounds of uranium each. Australia has the world's largest reserves of uranium, at more than 3.7 billion pounds, comprising 28% of the world's total supply of the mineral. Canada, meanwhile, not only has 1.2 billion pounds of uranium, more than 12 times what the U.S. has in reserves, but it also has the world's highest grade deposits in the mineral. Currently, uranium miners are saying that what they need to make scaling up production profitable is a higher price. Right now, the price stands at $85.50 a pound. But producers in the West are saying that to expand mining capacity, the price needs to be somewhere between $120 to $150 per pound. That's not an unthinkable price for uranium. In 2007, after adjusting for inflation, the price of uranium hit around $200 a pound. And previous to that, again considering inflation, in the 1970s, the price went up to around $170 a pound. The U.S. could also look to Kazakhstan, currently the world's largest producer of uranium. But unfortunately for the U.S., 90% of Kazakhstan's uranium for the next contract cycle has already been bought up by Russia and Chinese companies. This trend is likely to continue, with China currently building 23 reactors, the most in the world, and looking to expand its nuclear fleet even more rapidly in the years to come, and in fact overtake the U.S. in terms of the number of operating reactors by the early 2030s. This puts the U.S. in a difficult situation, with not much hope of scaling up domestic uranium production to be able to meet all of its demands. U.S. allies need prices to bring more production online to fill the supply gap left by the elimination of Russian sources of uranium and the buying up of Kazakhstani uranium. Last year, globally, uranium miners produced only 74% of the uranium that was needed, with the rest coming from stockpiles. Eventually, those stockpiles will need to be refilled, and then things will get tough for the U.S. looking to supply their reactors. But as one uranium miner commented recently, nobody's going to let a $10 billion machine sit idle. Utilities will pay whatever they have to for uranium to keep their reactors online. That means that the future looks bright for miners, but the U.S. may need to invest a little more than that initial $2.7 billion if they want to secure more Western sources of uranium. India, like China, is poised to significantly expand its nuclear reactor fleet to combat climate change. Currently, India is constructing 7 new reactors to add to its existing fleet of 24. Additionally, the Nuclear Power Corporation of India Limited, NPCIL, plans to build 18 more reactors, expected to come online around 2031 or 2032 through fleet mode construction. This week, the Indian government announced an ambitious plan to build another 7 reactors by 2029. This expansion is projected to increase India's nuclear capacity by 70% by 2029, with further growth anticipated in the following years. Moreover, NTPC, India's largest utility, formerly known as the National Thermal Power Corporation, has announced plans to build new reactors in addition to those being constructed by NPCIL. With increased investment flowing into India's reactor construction sector and a wealth of experienced professionals available, India is set to substantially grow its reactor fleet. India, like many other nations, is also exploring the development of small modular reactors, which are cheaper and quicker to deploy. This approach will allow for rapid capacity expansion. With all this new capacity coming online, India will require substantial new sources of uranium. Unlike the U.S., India lacks significant domestic uranium reserves and will likely need to import much of its uranium supply. While India does not share the United States' concern about sourcing from Russia, Kazakhstan's uranium production is already heavily committed to China and Russia. As numerous countries strive to address climate change by building or expanding their nuclear fleets, competition for uranium from major producers like Canada, Australia, and Kazakhstan is expected to be intense. Niger's government revoked GoviX Uranium's mining license for the Matawala mine after the company missed the project's start deadline. This significant uranium project faced setbacks as GoviX announced plans to challenge the decision, claiming the withdrawal didn't follow the prescribed procedure. Following this, GoviX's shares dropped nearly 30%, closing at 6 cents in Toronto with a market value of $45.9 million. GoviX was seeking $200 million US in debt financing to complete the project, estimated to cost $343 million. Matawala is forecasted to produce 50.8 million pounds of uranium oxide over its lifetime, averaging 2.7 million pounds annually. The company expressed concerns that the decision would negatively impact the region's economic and social development. Niger, a top 10 global uranium producer, holds a 20% stake in the project. Despite this setback, GoviX plans to publish a feasibility study on its Muntanga project in Zambia later this year. Matawala, operational since 2007, involved extensive drilling and development through low uranium price periods and could host significant reserves. GoviX had also completed environmental and social assessments, begun initial groundworks, and received a radiological certificate last month. Niger has suspended new mining licenses and audited the industry since January, now taking over its second major uranium project. In June, French miner Orano lost its permit for the Mararin project. Uranium prices, which doubled last year, have fallen to $85 a pound, remaining near the threshold needed to drive mining projects forward. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.